Are you tired of missing out on potential market reversals? Look no further than this order block trading strategy. This powerful method can help you identify key market turning points and take advantage of profitable trade setups. In this video, we'll show you step by step how to implement this strategy, including the key techniques to use. By the end of this video, you'll have the knowledge and tools to potentially improve your trading results without any indicators and find those elusive high-quality reversals. Don't miss out on this valuable opportunity and hit that like and subscribe button. Basic rules of order blocks. Let me explain the fundamental principles that govern order blocks within the smart money concept. Essentially, an order block is a zone in which the last candle was ineffective. It is widely believed that this particular candle is the key one in the decision-making process. Order blocks can appear both at the beginning of an impulsive movement and in the middle of the movement, taking the form of a candle of the same or contrasting color. To identify a valid order block, 3 significant rules must be adhered to. The initial prerequisite necessitates the creation of inefficiency, which transpires when there are pronounced movements that cause gaps between the shadows. Efficient and inefficient moves can be discerned through the following examples. The second rule mandates that a valid order block must facilitate a break in the structure or a shift in character. This critical juncture is the first indication of the market's intention to either sustain its current trajectory or reverse course. Lastly, a valid order block must be unmitigated, given that these blocks are intended for one-time use. As such, we exclusively seek trading opportunities when the price taps into the order block for the first time. I can understand that you don't have all day to analyze prices before opening good positions. That's why I designed a trading bot that automatically gives an alert 24 hours a day when you can open a buy or sell position based on this strategy. Through these alerts you will save a huge amount of time and only trade at the right times and start earning the maximum. Press the link below this video for more information. Identify order blocks. The first what we need is an understanding of which conditions are required to identify a high-quality order block. To trade order blocks effectively, we must account for 4 pivotal categories of factors. These comprise market structure, market volatility, and spread, market trends, and recent order blocks, alongside confirmations in lower time frames. We shall commence our discussion with market structure. It is crucial to recognize the most prevalent market structure patterns that transpire daily. In the given scenario, we have a valid order block that presents a potential buy trading opportunity. Yet, on examining the left-hand side of the chart, we can discern a gap between the candles. Specifically, we notice a gap below the first order block and another valid order block zone just below it. Consequently, there is a high probability that the price will descend to fill the gap, secure liquidity beneath the first order block, and subsequently advance when it taps into the second order block. When this pattern arises, and we have a gap and another valid order block located precisely beneath the first one, we dock the first order block 1 point for trading purposes. It is vital to remember that breaking below the first order block does not necessarily indicate a forthcoming reversal. This is because there is a high likelihood that this break merely represents a liquidity grab for future movements. Conversely, let us examine the second pattern. We have a valid order block, and upon scrutinizing the left-hand side of the chart, we can deduce that this move has swept the liquidity beneath the equal lows. This action can act as fuel for future movements. When this pattern emerges, and we have an order block that seizes the liquidity above or beneath the equal lows and highs, we bestow it with a +1 point for trading. Let's take a look at a bearish example of the BTC/USDC 1-hour time frame. As we can see, there's an obvious downtrend in progress. There is an order block that caused a significant inefficiency and break of structure, but what's interesting about this block is that the beginning of this movement is a liquidity grab, making it a +1 point trading opportunity. It's essential to note that every loss does not indicate a mistake in your analysis. No strategy is foolproof, as we can't control the market. Market volatility and spread. Consider the second aspect, market volatility and spread, when trading order blocks. The key to profitable trading is analyzing market volatility and spread. In this example, we can observe a strong uptrend in the market, with fresh order blocks being printed frequently and rejected before the price continues to rise. On the other hand, in the second example, we have a valid order block zone, but the market has already established several demand zones that were subsequently broken to the downside. Some traders may view these areas as opportunities for liquidity grabs and buy positions, but it's important to note that the supply has taken over in this scenario. Therefore, trading this order block without proper confirmation would likely be ineffective. Confirmation. Regarding trading order blocks, the third crucial factor to consider is confirmation on lower time frames. Confirmations help prevent unnecessary losses in case the market chooses to ignore the order blocks. Furthermore, having a solid entry reason as confirmation in our trading arsenal can boost our confidence in executing trades. It's important to note that the order block trading strategy is not limited to any time frame. Even after spotting order blocks on higher time frames, we still zoom in 2 time frames lower to find confirmations and entry points. For example, when using the 4 hours, 1 hour, and 15-minute charts as higher time frames, we search for entry reasons in 15 minutes, 5 minutes, and 1-minute charts, respectively. Rules for entry. Multiple price action setups can be used to confirm trading order blocks. There are several common patterns we can trade in the market. Initially, we wait for the market to confirm our higher time frame order block and for the price action to indicate its next move. The first thing we look for is a change of character, which signals the end of a short-term downtrend and the potential for upward movement. Once the market displays a change of character, we proceed to execute our trade. There are typically 2 common patterns that we observe, and we place our orders accordingly. The first pattern involves the change of character move to create inefficiency and a valid order block. In this case, we place our order a spread size above the order block and set our stop loss a bit below the lowest point of the zone. We use a simple profit-taking technique to achieve big risk-to-reward ratios without experiencing much tension. In the event that we accurately predict a price increase, we will adjust our stop loss to follow the market structure by placing it beneath each new higher low. This strategy allows us to capitalize on profitable trades until we reach a higher time frame supply zone, where we can exit the market with our gains. Resumen. So, today we have learned how to improve our trading results without any indicators using the locking orders trading strategy. This powerful method helps to identify key market turning points and profitable trading patterns on any time frame or pair. However, it is important to test and determine which pair is best suited for your strategies. I hope you enjoyed the video. If so, please leave a like and subscribe to the channel. You won't miss my upcoming videos on other trading strategies. Thank you for your attention.